What is going on, investors? Hopefully, you guys had a great day out there. It is time to talk about Amazon.com, ticker symbol AMZN. The company just reported their Q3 numbers, and I'm going to help you walk through this. This is one of the most complex set of financials that you can walk through. And I promise you, if you can get through this video and understand what's going on from a profit and loss perspective, understand these cash flows, and understand these balance sheet, different operating segments, you will become a better investor, because this is about as complex as it gets. Now, the other thing that we've got to talk about with Amazon is this thing has just been going sideways, okay? The stock is now trading off about 2.75%. Stock's actually pulled right into a range that we've had marked off on our chart for a very long time now, right about $3,300 per share. And look, over the last year, stock's up just 3%. It's probably going to give that back in the after hours. And year to date, up just 4%. This stock has been underperforming big time. I mean, we're talking big time over the general market, but then when you compare it to like a Microsoft, a Google, even a Facebook, and Apple, this stock is way behind it. And it's happened before with Amazon. It'll have long stretches where it kind of underperforms. And why is that? Is because when we get into these cash flows, we're going to see this company is doing I'm talking major investments in its business. We've also seen the press releases over the last few quarters. They're trying to do a rapid amount of hires. They're having to pay their workers more. They're running into supply chain issues. When we're talking about a supply chain disruption, Amazon is probably one of the companies that is hurt the most. So the longer that prolongs, the longer we see supply chains disruption, the longer Amazon stock is probably going to underperform. Now, let's jump into the press release. This has some errors in it. I'll try to correct this. This is why it's so important for you as an investor to be able to go in here and look at the numbers yourself, because trust me, these investment sites, they use automatic scrapers and they use AI to generate these articles, and they're not always accurate. So those are just some things that you want to keep in mind. Now, Amazon EPS of $6.12 missed by $2.81. That's not that big of a deal. Okay, Amazon gives a really wide range on their earnings per share, and I don't think anybody's really buying Amazon for the earnings. What we're buying this company is a lot for revenue growth. Okay, revenue in the most recent quarter came in at $110 billion. I'll show you that here in a second. Here's our $110 billion. I'll walk you through all the cost and the operating income that we happen to earn over at Amazon here in a second. That's up just 15%. And I say just because when you look at Facebook, when you look at Microsoft, when you look at Google, I'm sure we'll look at Apple's numbers later today, and they're going to far exceed this type of revenue growth. Amazon is starting to slow down on that revenue. And so it's one thing to slow down on your operating profits because you're paying your workers more. You have to reinvest in this business. I think every investor can understand that. But when you start slowing down on that top line, obviously we're running up into some very difficult comps with Amazon. Everybody was staying at home this time last year. Everybody was ordering things online. We were doing less leisure travel, leisure activities, pleasure activities, and we were just buying the essentials from Amazon and maybe grocery stores as well. Well, that has changed a little bit, and that certainly has hurt Amazon's revenue growth. Now, they did say Amazon Web Services AWS sales came in at $11.6 billion versus a $15.4 billion estimate. I will show you here that the Amazon Web Services sales actually came in at $16.1 billion last year on a quarterly basis. It was this 11.6 number that's quoted here. So the AWS segment, which we'll talk about more in depth here in a minute, actually is firing in all cylinders and looks really good. Online net store sales came in at $49 billion. The estimate was for $51 billion. Operating income came in at this $4.9 billion number, which we'll show you here just in a second. Here's this $4.9 billion operating income. That was expected to come in at $5.62 billion. Now, the all-important fourth quarter is coming for Amazon, and they're projecting revenues between $130 billion. It's hard to say that because it's just an incredible amount of revenue versus between $130 and $140 billion. The consensus was closer to $142 billion. So they're coming underneath consensus, and they did that for the Q3 as well. They actually guided lower, and they actually missed in the most recent quarter as well. So they're starting to guide lower and actually miss lower. That is a problem. And we're seeing here in the Q4, they're expected to grow between 4 and 12%, depending on where they hit between the 130 and the 140. That is not very good growth, in my opinion, especially when you're talking about a stock with a 64 forward PE on this one, and you got a $1.7 trillion valuation, and the fact that you have the Googles and the Facebooks and the Apples and the Microsofts of the world growing we're talking way faster than this on that top line. And not only that, they're generating way more operating income than what Amazon is. Amazon is absolutely getting obliterated by higher labor costs, supply chain issues, and those types of things. We'll talk about that more here in a little bit. Now, the operating income is expected to become between $0 and $3 billion. So they're expected to make very, very little money in the fourth quarter. Last year at this time, they made about $7 billion on that operating side. Now, let's jump into these numbers. This is the profit and loss statement. Amazon wants to kick it off with cash flows. And normally we follow the order that the company wants you to follow these things in. But I like to start with our profit and loss. It gets us down to this net income number, which we then pull down onto our cash flow statements, and it helps us understand these a little bit better. So I'm going to start with profit and loss over at Amazon. We've got our 3 months ended here. The left-hand column is last year on a 3-month basis. The right-hand column, or the second column, is our 3 months. This is our most recent quarter down this column. And then we've got a 9-month view, 20 over 21 on there. We'll take a look at that column when we need to, but let's take a look at the most recent quarter. We came in at this $110 billion worth of net sales. We're sitting at $96 billion worth of sales last period. I don't want to just brush over this, that $96 billion to $110 billion. Like we are disappointed from a percentage growth perspective. 15%. Okay, but this is just still incredible. Okay, the vast majority of companies out there are just simply not doing this type of revenue in their entire life, let alone over 3 months. So I do want to emphasize that $110 billion worth of revenue in a quarter is just absolutely amazing, okay? But we are paying out the nose for these types of revenues. Take a look at this. Cost of sales went to about $63 billion. We were at $57 in the previous quarter. Fulfillment went from $14 all the way up to nearly $18.5 billion. Technology and content also grew by about 30 or 40%, went from 10.9 up to 14.4. Marketing, this is a company that used to not spend a lot of money on marketing. Now they're spending a ton of money, okay? You went from $5.4 billion all the way up to $8 billion. And you've got general administrative, probably the one bright spot, the fact that that only ticked up by about $500 million to $2.1 billion. So we've got our total operating expenses at Amazon in the quarter went from about $90 billion all the way up to $105 billion. So you take this $110 billion and you minus off $105, and you get to an operating income of $4.8 billion. So that, my friends, is not a lot of operating income, especially when you factor in this company is worth $1.7 trillion. Now, let's take a look at it from a 9-month perspective. It paints a slightly better story, okay, because we have nice top-line growth from 260 to 332, but also we've seen our operating increase from $16 billion, this is operating income, all the way up to $21.4 billion. So we've seen nice growth over the last 9 months. This quarter just was really, really rough from an expense period, and from a fulfillment perspective, they just had to spend a ton of money getting these sales in the door. And it doesn't look like it's going to improve anytime soon, certainly not in the fourth quarter over at Amazon. You run through some things, believe it or not, you actually pay some taxes over at Amazon as well. And then finally, you get to this net income of $3.1 billion. Last year, we're sitting at $6.3 billion. Again, year over year on a quarterly basis doesn't look good. In fact, our earnings per share basically has been cut in half. But for the 9-month, you've gone from 14 $14 billion up to $19 billion. So if we can get past these supply chain issues, if you can get past the labor shortage type of things, and you get people back on Amazon starting to order things, well, all of a sudden things would probably start turning around quite nicely. Now, onto the cash flow statements. This is where you get a sense of like how much money they're burning over at Amazon on investments. I'll show you that here in a second. So you pull down this net income number, which we talked about was $3.1 billion in the quarter. Last year, we're basically 50% higher at $6.3 billion. You come down through, you get to add back in depreciation, you get to add back in stock-based compensation. All this looks relatively the same. Unfortunately, you went from about $12 billion worth of cash provided by our operating activities all the way down to about $7.3 billion. Even for the last 12 months, it paints a pretty ugly picture as well. You went from $55 billion worth of cash flows down to $54 billion worth of cash flow. Again, I want to emphasize that I say it's ugly, quote unquote ugly, that you went from basically sideways over the last year on your cash flows from $55 billion worth of free cash down to $54 billion worth of free cash. 99.9% of companies out there would absolutely just dream of that type of cash flow outside of the Apples and the Googles and the Microsofts. But when we're talking about a company that is worth $1.7 trillion, and the fact year to date it's up only 4%, and over the last year after tomorrow's drop, which this stock is almost assuredly going to be doing, and it's breaking below a critical level, this thing could just continue to drop like a rock. Well, it's very disappointing, quite frankly, if you are an Amazon shareholder, which I am speaking to you as I am. Now, unfortunately, it's not going to get any better because here's our purchase of property, plant, and equipment in the most recent quarter. $15 billion. Last year, we're sitting at $11 billion. Take a look at it over the last 12 months, how much money they've invested. They invested $30 billion in property, plant, and equipment, and this year it's ballooned to $57 billion just in the last 12 months, and I don't think anybody thinks that is going to slow down over at Amazon. That means this company is not going to be making money from a cash flow perspective, because take a look. You earned $56 billion worth of free cash, and you blew through about $62 billion of that just in your investing activities. They are releasing and raising more money in the debt markets over the last 12 months. They did a small amount of raise as well, but they did some repayments on that debt as well. We'll see more of that when we get to the balance sheet over at Amazon. All things being considered, it's actually pretty ugly over at Amazon, and we're seeing the toll of the economy that we're in right now taking its toll on an Amazon.com stock. As you go through these numbers, it's just showing you higher labor costs, higher product cost, higher cost across the board, higher delivery cost, higher investment cost, and Amazon is taking the brunt of that, whereas companies like Microsoft and Google showed that they can soar right past that. Moving on to the segment information, I wanted to show this to you as well. This is really ugly, okay? So we've got our North America net sales. We went from $59 billion up to the $65 billion worth of net sales. Unfortunately, we had operating expenses coming in at $64 billion. This is showing you just how much more expensive this business is to run, because look at last year, okay? On a 3-month basis, we had net sales of $59 billion in North America. We had operating expenses of $57 billion. That gave us positive operating income here in North America at $2.2 billion. Now look what happens. We bolted on over $6 billion worth of sales from 59 up to 65, but look what happened to our operating income. It actually went down, darn near break even. From a rounding perspective, we only earned $880 million, which quite frankly to a $1.7 trillion company is like finding a quarter on the ground if you're a billionaire. This is like nothing, okay? And then take a look at what happened in the international, the exact same thing, okay? Last year, we went from $25 billion worth of sales, $24.7 billion worth of operating income, and we broke even on that segment, or we just squeaked out a small gain, about $407 million, and it actually got got me excited as an investor. I thought, hey, Amazon's turning the corner on this international business, okay? And I understand it takes a long time to scale up these business, and Amazon was right there. Well, now take a look at what happened to the international segment. We bumped up our sales by about $4 billion to $29 billion, but now we spend another $6 billion on operating expenses, and we lost nearly $1 billion. And in fact, that wiped out our entire gain that we made over in North America. So the bear case argument that has always been around with Amazon is AWS is the only thing that makes money. AWS is subsidizing the Amazon.com retail business. Well, right now, that is 110% true, because we come down here to AWS and we went from $11.6 billion worth of revenue. I mean, this is really great growth, okay? This is like the only thing to be excited about, I think, with Amazon. And this is one reason why they can't really spin this business out of Amazon.com. Like, imagine if you spun AWS out and then you had just the retail business left. Well, ooh, man, that might be a tough stock to own, whereas AWS would absolutely be the stock you probably would want to own, because you go to 11.6 up to 16.1. Take a look at this. Our operating expenses only went from 8 up to 11.2. Our operating income went from 3.5 billion all the way up to this 4.8 billion. When we looked at our net income, our income, operating income, what was it for the most recent quarter? $4.8 billion. And so AWS right now is sitting at a $4.8 billion run rate. That is where we're making the bulk of our money right now with Amazon, and it doesn't look like it's going to change anytime soon. Here's the other thing that's very alarming and very concerning. Here's our year-over-year sales growth in North America. It went from 39% down to 10%. International went from 37 to 16%. I think the only good part about this, there's actually two good parts. Let's take a look at AWS. You went from 29% all the way up to 39% growth, okay? That is not quite as juicy as what Google and Microsoft printed, I believe, on their cloud business. It might match what Google did, but this is really strong. When you're the market leader and you're keeping up with your competitors from a growth rate perspective, very, very, very exciting, okay? And so AWS, we should feel really good about. And I tell you what, if AWS put up a stinker, this stock would be, I think, all the way back down into the bottom of this range, $2,900, maybe even $3,000 per share. The fact that it's holding these levels is, I think, only because of how well this AWS performance is. Because when we look at the sales growth in North America International, we're only growing 10 and 16% respectively. And again, I said that there was one other caveat around this, is Amazon's always viewed, oh, they're a monopoly. They have a corner on the e-commerce market. These numbers are not saying that, okay? When you're only growing 10% in your home market, that's a disaster, quite frankly. Now, last thing we'll look at is the balance sheet. I think less relevant over at Amazon, because you're expecting this company to blow through cash, and that's really kind of what they've done. They had about $84 billion worth of cash at the end of last year or the end of this year, and they've got about that now. They got about $80 billion. We have a little bit more long-term debt, actually a little bit more than a little bit. Okay, you went from 31 up to this 50. So they're financing a lot of the losses that they are maintaining, investing in the business, paying their workers more, paying more for fulfillment, paying more for freight to get goods over there. They're financing that primarily through debt, which I have no problem with because of the interest rates that Amazon has to borrow at, and they still have a boatload. I mean, we're talking about a boatload of money sitting on the balance sheet, so I don't got a whole lot of problem with that, but it is kind of blowing up this balance sheet to a certain degree. Now, let's talk about Amazon from a technical perspective. If you're a fan of the channel, you know we always do our FANG stock recap show. In fact, I think that show's nearly a year old at this point, where we recap all the major FANG stocks, including Amazon. And really, since we started that show, Amazon has been in a trading range, more specifically about $3,000 up to about $3,500. I mean, it is spent, this is a daily chart that I'm on, it is literally spent maybe 2 or 3 weeks outside of that range. So Amazon over the last year, and I showed you, over the last year, the stock's basically flat. Year to date, stock's basically flat. So I'm not telling you anything that you didn't already know, but when Amazon does pull down below this $3,000 level, it can trigger buying opportunities really in $100 increments, okay? You can come in here at $3,200. I think that's an excellent spot to buy this stock. Down at $3,100, it's an excellent spot to buy this stock. And down at $3,000, that is also area to buy this, anything south of that as well. Now you get above 3,500 on this one, and it has brought in sellers. You're really looking for a break above 35 and eventually maybe 37. This is the bull case scenario. Now, here's my argument for Amazon is they are going through a difficult period where they're having to invest a lot of money into their business. Well, that's something Amazon is known for, and that's something, if you're a shareholder in Amazon like I am, you're very comfortable with that. But we're a little uncomfortable right now with the fact that we don't have a lot of control over the supply chain. We don't have a lot of control over rising wages, rising fulfillment costs, rising shipping costs, rising difficulty on getting product onshore to sell to your customers. We're seeing evidence in the fact that these sales have come screeching to a halt. The fact that you go to Amazon and maybe what you want is a little bit more expensive than you were expecting, or just the fact that Amazon simply doesn't have that product available for sale. I think we're seeing evidence across the board. But if you can look down into the future and see that maybe Amazon comes out the other side of all that, well, it can create some great opportunities for this stock as they drive productivity with their workers. They're going to have to reinvest a lot into robots and machines and eventually drone delivery in order to drive these costs down. So if you're a long-term investor in Amazon, that is what you're going to really want to keep your eye on, is the fact that Amazon needs to drive productivity with delivery. They're going to need to get faster and cheaper on the delivery side, and they're going to have to use way more robots to handle this package, okay? They have nearly, I think, over 1 million employees. We need to try to shed some dead weight, quite frankly, okay? God bless everybody that's working at Amazon, but it's costing this company tons and tons of money. And then on top of that, you need the supply chains to loosen up and allow Amazon to get back to what it's doing its best, is having a full catalog of products on Amazon.com at the lowest price and the fastest delivery. Right now, I don't think Amazon can offer that, and that is hurting the sales of this business. On top of that, from a technical perspective, it's looking like this is pulling into areas where we can buy this. I tell you what, if you zoom this Amazon chart out, I'll put it on a monthly basis here, and Amazon has gone sideways before, and you can actually see evidence of it right here. This was back in 2018, really all the way through 2020. This stock actually went sideways for quite a long period of time, okay? It traded between about $1,500 up to about $2,000. So that $500 trading range that we're seeing right now, Amazon did the exact same thing. And then when it broke to the upside, it went from $2,000 all the way up to like $3,000. And we're talking in the matter of 3 or 4 months. So if you're an Amazon shareholder like me, and we've seen other areas of sideways consolidation with Amazon in the past, it can last well over a year, sometimes even close to 2 years, where Amazon can trade sideways because of the major investments that they have to do into their business from a labor perspective, a fulfillment center perspective, and a delivery perspective. So don't be super alarmed that this stock is trading sideways. Unfortunately, if you're like me and you're mega overweight this stock, it is going to weigh down the performance of your portfolio to a certain degree. But I think you just hold on. You just hold on. You believe that Amazon will come on the other side of this, get productivity and wage benefits in the future, and all of a sudden this company and this stock will take off again. I just think we're going to have to be very patient with Amazon. That was Q3 over at Amazon. We'll see if they can do an upside surprise in Q4. We'll be here to cover it with you all the way here on the Investor Channel. Thanks for tuning in today. Good luck with your investments.